What's going on, team? It's Caddy with Money Investing. I hope that you all are having an amazing day. So in this video, we're going to go over the S&P 500 index, ticker symbol SPX, and we will perform a technical analysis on it. We'll also go over the Nasdaq and some of those other SPY holdings and what to look out for remainder of the week. As always, if you guys enjoyed this video, make sure to drop a like. It really helps out with the channel. If you are new here, please make sure to subscribe and hit that notification bell so you don't miss out on any future market updates and videos related to investing and technical breakdown. So the markets were up, the S&P up over 1.3% on the day. The Nasdaq was up just about 1% and the Dow Jones rallying over 2%, going up over 500 points. So a very green day in the markets, and obviously all the SPY holdings which are inside the S&P 500 index were also up. Caterpillar up over almost 5%, Chevron and ExxonMobil both up close to 3.5%, Nvidia rallying close to over 3%, Berkshire Hathaway, MasterCard both up over 3%, and then tech was also kind of flat, but they were kind of on the upside as opposed to Amazon that was down close to 65 basis points and Netflix that was down 10 basis points. I want to quickly go over Tesla. There's talks that they're going to be included in the S&P 500, and for them to actually be able to do that, there's 4 criteria that they need to meet in order to be listed and included in the S&P 500. And Tesla right now meets 3 out of the 4 criteria. The 4th one being reporting consecutive profitable quarters, which is what they will report on July 22nd, which is when their earnings are. So if you go over to the Tesla's ticker symbol, you guys will notice right here, this right here is going to be July 22nd, which is when they report their earnings. And if they report a profitable quarter, they can potentially go under review, and I think they have to have a vote whether Tesla is going to be included in the S&P 500 or not. And there's a lot of different things that we need to consider right now. It is one of the most valuable companies in the United States and in the world in general, so definitely is going to play a huge role in the S&P 500, the index funds, the ETFs that have the S&P. So one of the things that I'm really curious to know is how the volatility is going to play in for S&P. Tesla, as we know, has been incredibly volatile lately, so including that in the S&P 500, and as the price fluctuates, that's going to affect the market cap of the company. As a result, is going to affect the S&P 500's volatility. So that's something that I'm not quite sure how that's going to play out, but we'll keep a close eye on it and their earnings and when they report and how they did in the recent quarter. Now that being said, if you guys did get a chance to watch my market update from last night, you have a really good understanding on what we were looking at in terms of price action. I'll go ahead and clear some levels for you just so we get a clear understanding on what went on today and what are some of those levels that we need to watch moving forward. The market's essentially opened here, so 31.27, or in fact 31.41 is where we open. You guys can see that right here is where we opened at 31.41. We hit a low of 31.27 right at the 9-day EMA, which is the white line, right? So it sits at 31.27.5. So you can see how the lower wick is right at that level. And yesterday I also mentioned that this previous resistance at 31.55, where we have gotten rejected multiple times, and this has acted as a previous resistance and a bear camp, we switched that over to a bull camp because you can see over the last few days the markets have essentially not broken below the 31.55 level. Every time we were below that level, the bulls jumped in and just pushed the market higher, right? So you can see back on July 6th when the market essentially opened 31.55 and rallied over 1.5%. This right here is July 7th. We hit a low of 31.42, but then we closed at 31.45. So there was a little bit of weakness on that day, but since then you can see that we have just not dipped below 31.55, right? So all the bodies of these candles are right above the bull camp. And even today we dipped all the way down to 31.27, but then the bulls came in and they saw this as a good dip buying opportunity and just pushed the pattern higher, hitting highs of 3200. So this right here is what the high for the day was, 3200.95, and rallying all the way. So if I were to go ahead and switch the candles here just so we can get a better understanding in terms of the days. All right, so nothing changes for those 5 days. So right now you can see that we've had a bull day, a bear day, a bull day, a bear day, a bull day, a bear day, a big bull day, and then tomorrow can potentially be a bear day. I mean, that's just based on previous patterns. But again, there's no certainty as to what's going to happen. And even if you look at the futures market, you can see that the S&P futures rallying close to 1%. This is where we opened at 6 p.m. So if you were to go over to the 1 hour chart, you can see how we opened right here. This is July 14th, 6 p.m. and we just opened higher. So we just filled in this gap and we just pushed up even more. So if you go over to the 5 minute chart, you can see how we're just pushing higher. So that's really interesting to look at, and something I'll keep a close eye on over the next few hours and overnight, and where the market opens tomorrow. I mean, based on this, the market can potentially gap up heavy, but again, this is no representation of where the market can open tomorrow because things change overnight. There's going to be different pieces of news that are going to come out. Earnings are going to be announced as well, so that's going to affect the S&P 500. But now if you go back to the SPX, which we have been following very closely, now if you go over to the 1 hour chart, you can see how this right here is where the market's open, right? So this is where the market's open at 9:30, and we rallied over 2.3%, right? So on the day we were up 1.3, but we rallied close to 2.28%. So now what are some of those key levels that we need to watch moving forward? So this right here is our resistance from yesterday on July 13 when we hit that level between 10:30 a.m. and all the way to 1:30 p.m. before we saw this huge sell-off all the way down to 31.25. So this is where our bear camp sits and also where our next resistance is going to be. If we are potentially going to open higher, that means we are prepared, or we are expected to open somewhere in between this range. So this right here is somewhere where we are going to potentially open. The next resistance is obviously going to be 32.30, which we have recognized in my yesterday's video. So this right here is going to be a very key level that the bulls need to break out of. If we break out of this level and then pull back and retest this resistance as support, and that support gets validated, then we are off to the races. Then we are going to potentially hit all-time highs. I mean, all-time highs sit at 3,400, but there's a more near-term resistance right here at 33.30. The next 100 points is going to be really important. So if you break out of this level, then we're looking at a jump of close to 3% all the way to testing 33.30, which is what this level represents right here. If you do get rejected, then obviously this right here is going to continue to act our support. Even though it didn't act as support yesterday, we completely blew past that support and broke even below, further down to 31.25. But this previous resistance, in my opinion, will continue to hold as support if we do approach that level. If you were to move back, that has previously acted as some type of support in the past, right? So going back as far as June 10th, when we validated that support. So in my opinion, if the pattern does push up and we do get rejected at 32.30, we could see it pull back down to 31.85, which is going to act as our next key support. But if we do break out of this level, then we are off to the races to fill up this gap of over 3% at 33.30. Again, there's a lot of mixed signals that the market is sending us right now. I mean, we have seen the bulls take over every time the pattern hits as low as 31.55, but we have also seen the bears essentially sitting at 32.30 because yesterday we saw this huge sell-off as soon as we approached that level. So there's a lot of downward pressure coming in from 32.30 level, but there's also a lot of buying pressure coming in from 31.55 to also now 31.80 level, because as soon as we break out of this level, we just didn't pull back. So if you go over to the 5 minute chart, you can see how as soon as we broke past that level towards the end of 3:30, the next 15-20 minutes we just rallied and didn't even came back down to retest that support. So there's definitely good buying momentum right now. So you can see this is where the market's opened, and as soon as the market's opened, we pushed up, had a minor pullback, and this right here was kind of like the dip buying opportunity. I did pick up some shares here too for some of my positions, and then the market essentially rallied close to about 2.2%. So like I said, there's definitely a bears sitting at 32.30, which is where the bear camp is, and then the bull camp obviously is going to be right around 31.50 level, which is where we dipped below down to, but then pushed up and then essentially revalidated that support on the 5 minute, eventually broke out of those levels. So moving forward, futures are up, expected to open somewhere here and then potentially retesting this resistance at 32.30. If you do get rejected, next support sits at 31.85. If you do break out of that level, then we are off to 33.30. So now we're going to quickly go over US100, which is going to be the Nasdaq market, or essentially the Nasdaq 100, to understand how the pattern has been doing and where can I potentially see the markets going for the Nasdaq index. So if you were to kind of pull back on the chart, you can see how this right here, if you go over to the daily chart, you can see how this right here was kind of like the range that we were looking at for the Nasdaq 100, and it's kind of like on the upper band or the upper channel for the Nasdaq 100, right? So it's not unlikely for the pattern to pull back a little bit for tech in general, because it has been very overextended. But with tech right now, as hot of a sector it is, you can never tell. I mean, the markets can remain a little bit irrational and continue to trend higher before pulling back and filling this gap right here, which is going to be on the lower, kind of like the channel, and this higher low, which is where the pattern was essentially bouncing off of, right? So you can see how going back as far as April, pushed up, pulled back, bounced off of these levels, bounced off of these levels. It was kind of like a basketball just bouncing off of those levels, right, and moving higher and higher. So this right here is the channel that we still need to fill, which is going to be a drop of 6 to 6.5%. But again, with tech, it's just really difficult to predict right now, because everything has just been bought up every time we do see a minor pullback. So you can see how this candle right here, which is all of today, the market's dipped as low as 10,371, so all the way down here, and then it got bought up, right? So it got pushed up all the way up to here. So this long wick just represents that the pattern was down to that level at some point, but it just got bought up, as people seeing that as a really good opportunity in tech. And the last thing I want to go over in this video is going to be the VIX, which is going to be the volatility on the S&P 500. And you can see how we've been tracking this on the daily chart for quite some time, and I have a support marked at right around 24 levels. So we've seen how the pattern essentially pushed up from that level. If you bring up the 200 moving average, you can see how earlier we were talking about this huge spike in volatility of close to 91%, because of the fact that the volatility, or the VIX index, approached down all the way to this level. So it was kind of gapping in on this channel, and the 200 moving average was right there as well, and which acted as a support, resulting in a huge bounce in the VIX index. And then over the course of the next few weeks, we saw a very similar pattern. You can see how the volatility died down, and as a result, the S&P 500 was going up as well. But then yesterday, we saw a spike of close to 18%, hitting highs of 32.5, and then today we hit a high of 33.7. So I put a price target of 35 on the VIX, because in the near term I did foresee a minor volatility spike, which is what we saw yesterday and today in the earlier session. But then it kind of sold off and the volatility died down. So moving forward, it can very well continue to just die down and break below the 24 level, which is what we want to see. But if it just kind of consolidates here and the moving average is going to diverge into this as well, then we can potentially see that act as a support again, resulting in a spike in volatility, which is going to drive the S&P lower. Now we understand there's a negative or a inverse correlation between the S&P and the VIX. Every time the VIX spikes, it usually happens in times of financial distress or economic disruptions. So it's going to result in the S&P 500 dropping. So keep a close eye on it. Again, there's no certainty as to what's going to happen. But that being said, I wanted to highlight some of those key levels for the S&P and the Nasdaq. And in my opinion, where do I personally see the markets going in the near future? As always, if you guys enjoyed this video, make sure to drop a like. It really helps out with the channel. Also subscribe and hit that notification bell so you don't miss out on any future market updates and videos related to investing and technical breakdowns. As always, happy investing, and I will see you guys in the next video.